welcome back to see you on the show. We're excited to have another episode on AI in the credit union industry. And today we have two experts to talk to us about AI, Sam Das from TruStage, from the ventures side of TruStage, and Chris Coleman from Clutch. Welcome, gentlemen. Glad to have you on the show and love to hear how we're going to get to great ideas to help the credit union movement. So first, tell me, how did you first start working with credit unions?
Sure. Why don't I kick things off? And Doug, thanks for having us on. I had an interesting foray into credit union space. So I am a reformed investment banker who started a fintech coming out of the Great Recession. And not unlike a lot of fintechs at that time, they were looking to get broader distribution, serving those American consumers that were being displaced or underserved by traditional financial services. And, that in a nutshell is really the mission of what credit unions were. And I was seeking out credit unions for partnerships, distribution, trying to provide solutions to the same members that they've been serving for literally decades. And that got me onto the radar of TruStage, or then CUNA Mutual Group. And kind of one thing led to another. As I was having conversations with the organization, I came to find out that they had just launched their ventures arm. And what I was trying to do with my one fintech, they were looking to do much more broadly. They were going to operate like a traditional CVC where they help the core business, but given TruStage's unique relationship and partnership with the credit union ecosystem, there was an avenue to, really help in a very symbiotic relationship, help propel innovation into the partners that they work with. And I thought that was fantastic. And you can do that at scale, especially with the resources that TruStage has at its disposal. So I literally sold off my company and I joined the ventures team. And it's been fantastic. We've been able to live into that broader vision and mission with the credit unions. We've grown the portfolio. When I started, there was maybe half a dozen companies in the portfolio. Now we're pushing over 50 and deployed over $400 million of capital that have really gone to invest in companies like Clutch that are, bringing innovations, bringing fintech partnerships to the forefront of how credit unions can modernize their business and really serve the needs of their members in a very rapidly evolving ecosystem.
The fastest ever, right?
Yeah.
Chris, tell us about what you're doing with Clutch.
Sure. So I'll get to a story of how we got involved with credit unions and how it emerged to Clutch, because I think those two are very related. So me and my business partner actually started a business selling used cars online. We were not Carvana, even though we eventually sold to Carvana, but our first finance partner, we started in the Bay Area, and our first finance partners were all credit unions. And so we signed up with, it was Cuddle at the time, Origins now.
Was the Bay Federal Credit Union part of your activity? I know those guys.
We dealt with actually a bunch of Bay Area and California-based credit unions. So we were a dealership at the time, and so we sort of our knowledge of credit unions was mainly limited to indirect lending. And I would say that in some ways we didn't fully understand what we had gotten ourselves into in more ways than one, but one of which was, why do credit unions give such great lending rates? Because we knew, hey, we can actually offer through this platform and through credit unions, the loan rates that we offered on these used cars were more competitive than anything else that we were finding in market. And so we had that knowledge. We didn't know or fully understand why. We just knew it was true. And in some ways, as a dealer, it didn't necessarily matter to us why at the time, but it would become important later. And so we went to Carvana. Carvana operated very differently than us, much bigger company. They had figured out a ton that we had frankly failed to figure out in our online dealership. One of the things they did do was they had they focused a lot on the experience of financing a car. And they realized if we can make it very easy, more people will go through with it. And so they focused a ton on how do you make sure that someone can go from start to finish without having to call 10 people, check 90,000 boxes, and get simple answers. And they did that, and it really worked. And as a result, they didn't have to have the absolute lowest rate. What they did is have the easiest experience possible. And so armed with that knowledge of ease of use matters tremendously, credit unions have the best rates. We became very educated for our next business, which was when we launched Clutch in 2020. And so the idea was that the reality is we believe credit unions should have a lot more debt of American consumers than they currently have. And so we said, how can we use technology to really enable us to enable credit unions to be that great lending partner to individuals that really better services them than a lot of these other alternatives. And so we focus very much on the process and the experience of lending for credit unions. And that's how we started. That's where we maintain our focus today. And we've expanded in many directions that all sort of serve that same fundamental mission.
So boy, there is so much to go from there. So Chris, talk to me a little bit about the capital structure. Are credit unions part of your capital structure? Are you a QSO? What's any involvement there in credit unions?
Great question. So we're venture finance. We are a QSO. And so, we've had some great partners who have indirectly invested through things like Circle Fund. So we've got some indirect relationships for financing for credit unions. We are a QSO. 100% of our customers are credit unions, and that has been our focus as a business. But the ownership structure of the company itself, we are a venture finance business. For credit unions to win, we have to be an aggressive, competitive company. And so that's our mission, and that's what we're doing.
Yeah, and moving fast. So in the portfolio, Sam, like you see all kinds of different things. And then would you say 40 companies?
50.
50 companies that TruStage is invested in. Clutch is in the lending space, right? So it's consumer lending, right? Not home equity lending. So what have the trends been in that space, right? Is it like Chris just said, making the process of lending as easy as possible, or is it identifying new customers? Like what else is there in that space that you guys are involved in? Is there any other involvement? Is it strictly Clutch?
Well, it's a great question, right? Because if you ask that same question, even just 6 years ago, every credit you talk
what is that in AI years? Like 40 years?
Exactly. If you ask that same question, it's every credit union you would ask is, all we're looking to do is increase lending volume. Like, how do we lend more? How do we put more of our work, right? You look back over the last 2-3 years, that conversation has changed dramatically. You had a bit of a banking crisis where, some large scale commercial banks had failures. They were run on deposits, and then everyone got really scared, and that kind of upset the equilibrium that many credit unions were operating, many financial institutions across the country were operating under. And now, we certainly invest in a lot of lending companies, but I really look at our investments going forward as more really balance sheet and strategy management solutions, right? Because you have to look at both sides of your balance sheet. Yeah, growing loans is great, but if you're shedding deposits and with them, are you losing members? Well, you need to solve for both to actually grow. And Clutch has really leaned into being an overall partner to credit unions, providing both the deposit solutions as well as the lending solutions. And a lot of our portfolio is looking at how do we help credit unions holistically deal with a lot of these issues that they're facing. Everyone, you can simplify the broad categories of where credit unions are focused in on and where they have the biggest priorities, both in terms of budget dollars and strategy priorities around growth, efficiency, and fraud, right? And growth can cover both lending as well as growing non-interest income, as well as just growing member base and deposits. Like all of those are very much top of mind. And where everything that you're talking about when it comes to AI is how do you drive efficiency on getting to that growth, driving efficiency. How do you do more with less, and how do you combat fraud, especially when all the bad actors out there are using the latest and greatest AI technology against you? And so there's a multi-layered approach to how these types of new technologies can be utilized to really move the needle on across all of those strategic priorities.
So let's have some examples, Chris. So let's talk about it. Yeah, let's go into what is Clutch doing on the deposit and the lending side? What are credit unions doing with Clutch right now? And then where do you see it going? So yeah, let's go right into the detailed examples if you can.
I'll go into a bunch of examples. And I want to touch on Sam's seesaw a little bit, a balance sheet. And so let me explain. We started off with just lending products. And the goal was whenever someone's interested in a loan, how do you maximize the likelihood they'll get a loan? And that's reducing friction, reducing fraud, but it's also maximizing the number of products they engage with. And so those are things like proactively surfacing cross-sell. One of our early observations, the market's really flipped a lot from a balance sheet perspective from 2020 to 2022. So in 2020, it was, I cannot issue a loan fast enough. In late 2022, it was, oh my God, I need deposits, please stop lending. And so credit unions are always playing the seesaw game. And really, I think part of the failure of many other products in our space has been not realizing that these two sides of the house are so integrated and so coupled. We sort of forcibly went to understand that in 2022 and said, look, we've got to have a way of bringing deposits on board because we have this twofold effect of one, people come for loans, but often they actually do have deposits to give and vice versa. And three, these two sides of the house were disconnected not only from a product perspective, but also from a department perspective, right? Like the person who buys the deposit product sometimes didn't even talk to the person who bought the lending product. And so as a result, what the experience was for the member was, I want to get a loan as a guest. Why do I have to re-enter everything and go to a separate platform, run through a series of different fraud systems to then give you $5?
I can't tell you how much I hate that. I hate that.
And that's exactly the case. And that's why, we merge these two sides of the house. So the reality is when we think of you onboarding, it can come from either avenue. We want to be able to maintain this concept of you as a person, and we should have full visibility into what you as a person see. It doesn't matter whether you're a person in deposits or a person in lending, or whether you came in first to lending or came in first to deposits. And so that's where we spent a lot of time. Now, where does AI come into this, I think was your subsequent question. And there's a lot of very real world examples, and a lot of cases where AI is in air quotes, is really advanced machine learning in some cases too. And so as Sam pointed out before, I think there's a number of use cases for AI within credit unions within the building. I'll let you know how we've used them constructively in a couple point cases. So the most obvious one that people look to a lot of times is just efficiency, which is where can AI do something that I used to do in a way that's faster, easier. And so one of the things that we found as an example is a lot of loans came with what I'll call these almost boomerang follow-ups. And so a borrower would want to get a loan, and they would have conditions and stipulations to go along with a loan. Things like you need to provide proof of income, I need additional resolution on your identity through one more document. So cases that just needed a resolution in some way. And so often the lending system would tell you this. Then a person would have to do outbound calling or outbound emailing saying, hey, we still need these three things, and do some lightweight verification. Those are things that AI is actually very good at. And so we've started with a number of pilot credit unions saying, hey, can we read from the LOS and actually start to do some of these tasks that are more basic in nature, but just offload this follow-up system. And so whether it's retrieving documents or informing lending applicants of their loan status, we use an LLM that basically reads the lending system and then talks the applicant around these more basic cases. Now, it won't handle everything. As we said, there's a trust hurdle of, would you trust AI to be your lawyer? No. Would you trust it to greet you nicely? Probably yes. And so you're always trying to move as far forward in the spectrum as seems safe. And obviously, safety and risk and total knowledge can constrain what that forward point is, but you always want to push as far forward as you arguably can. And even that's changed a lot in the last 24 months. And so that's an example on efficiency. There's other examples on things like discovery. So what are things you haven't done that you now could do because AI has materially lowered the price of doing so? And so those things are things like product discovery. So a good example is historically, if someone applied for a personal loan but wouldn't qualify, but they actually could have qualified if they had a secured asset. So things like cash out refi or HELOC. Those are areas where you have to explain the product to someone. Mm-hmm. So it's been very hard to do that in a UI, for example, because somebody goes to apply for a personal loan and you're like, what are you showing me my own car for? Like, that doesn't make any sense. And so that's areas where some of these language models are actually really good at explaining what's happening and why, and the small interjections of the product can fill in those gaps. And so that's an example. Another example is just like a lot of credit unions are, I would say, under market to their audiences. And the reason you feel like you're under marketing is because the message come across as very under personalized. So, historically it's, hey, want loan, or some variation thereof. But now you can get to a level that's far, far more personalized by reading in a huge amount of data, being able to use the LM to construct an email that's very personal to that individual, still maintaining compliance and rules and moving forward with remarketing and retargeting on a very personal endeavor.
Now, is there any data? I don't know how well you said 2020, right? You started at the perfect time for capital raise. Me too. But do you have any data around efficiency pickups, additional loans gathered, that it was above the ratio, especially? I think one of the things that I imagine my listeners would love to know is how well you've done in taking indirect loan-only relationships and converting it into a more robust relationship.
Great question on the last one. That's an area we haven't yet launched what we want to do there. There's a lot of work that we want to do there that I think now we have the absolute avenue.
Yeah.
Let's talk about efficiency gains. I think efficiency gains the easiest one. So how much can you offload what someone used to do? That's like the easiest metrics of, you did it, now do I do it? And so for the document collection, it used to be that 100% of the role of an individual, like 100% of documents were gathered by humans. At this stage of our product, 80% of the documents are gathered by the system. So if you're on the cross course of having to gather 10 documents, 8 out of 10 will be done by the system versus human. And so you can already see where the systems are doing the work. And granted, that's not everything that has to be done in lending, but it's a good example of how you can start to take on these tasks, and these tasks really can be completed.
That's a big difference if it can also be done asynchronously with the branch operations environment, right? All on your phone, of course.
Every day, doesn't take sick time, all sorts of reasons why some of these tasks are really well suited to that endeavor. It also lets the humans focus on the right things, right? Like, you want humans to focus on the highest value conversations that require the most empathy. And so it doesn't mean you necessarily do less work. It means the work you do can be more targeted and better.
Higher value, more customization. Yeah. So as far as, but laying metrics about any credit union that had a pickup of a certain amount of basis points or anything like that, do we have any juicy tidbits like that?
That's what I would say is, I think 10 to 15% in look to book is a very reasonable expectation of what people can expect. The measurement is a little more difficult because all the market's changing at the same time that all these systems are changing. I mean, we'd love, put it this way, I always say we'd love to give ourselves credit for everything that happened. But I'm always impartial in saying, I believe we deserve a lot of that credit. I don't believe we deserve every ounce of that credit.
There are examples, we have other companies in the portfolio like Posh that's providing conversational AI solutions that, it's funny, like all these conversations around AI, they've obviously picked up in the last year or two, but these technologies have been around for a number of years, right? And pushing almost a decade. And it's all going back to, Chris's point, like driving efficiency. How can you drive more operating leverage with the people that you have. Really utilize those people for what they do best and having those human interactions. But AI, Posh has been delivering like chatbot solutions into the market for years now, and have seen dramatic um, chat containment rates where entire member-facing inquiries are completely handled through the chatbot. And in some cases, yeah, 80% of all of those inquiries are being handled just by those chatbots. And now
Hey,
with
Sam, I want to get the spelling right. Spell Posh for our listeners.
POSH.
POSH.
Yeah.
All right. And so this is an actual intelligent chat bot, not just a chat bot that chooses from a series of responses and throws that back at you. This is another level.
Exactly. And it understands how to elevate it to that human, right? The human in the loop is still a very much needed part of the equation. And I think all good providers has that built into its workflow. And it's really about how to optimize the talent that you do have for where they're going to make the most impact to the member experience. Because that's what everyone is living and breathing with, right? Like, how do we optimize that member experience? How do we make sure that we retain those members? How do we remove as much friction from getting them from point A to point B where they want to be, and reduce all the knucklehead stuff that we may have had to dealt with in the past, but we've found the technology to solve for it so that it does look seamless to that end member.
Very, very hard to do, though.
Yeah.
Right? Yeah.
But I mean, with these new technologies, it's getting easier to do. You just need to have the wherewithal to take that first step to first learn about it and then start experimenting and finding the right partners to work with to get that done.
Yeah, and part of our outcome in this conversation is making it normal, right? So how many credit unions are doing this with you right now, Chris? How many credit unions are actively working with? I know there's probably a bunch in process because it's the wave, right? You get a couple and then all of a sudden the wave comes. Are we just getting the first few now, or how big has it got so far?
So there are 9 clients that are actively using this like automated, that is this direct consumer facing LLM. And so we have 9 clients who are already using this and getting great results. We have 140 clients, a little over 140 clients total. So it's still a small subset. And as you imagine,
that's not that small.
It's not that small. But as you imagine, one of the things that I always find funny is people are getting up to speed with how do I evaluate the safety of what's happening? And so even things like contracting, there's things like, in some of our contracts, people want us to be like, well, we really don't want you to change the model. We don't want you to change the underlying model. And I always negotiate, it's going to be really hard to do in this new world because the model is deprecated about every 12 months. And so whatever you used to of like stable systems, long-term guidance, set it and forget it. It really doesn't work that way in this industry. And so I think a lot of our clients are having to learn not only about the technology, but to learn what's different about the technology and how do I get comfortable around safety. And even in our 12 months of evolving this product, which is, I think it's been live for a little over 12 months at this point, about 18 months. Even in evolving the product, the advancements within the fundamental architecture, what you can do, have meant that version 1 of the architecture has already been rebuilt 10 times because of the advancements in the fundamental models that allow you to have these additional safety layers.
And when a credit union begins to use Clutch, and if a listener wants to look it up, is the URL clutch.com?
It's withclutch.com.
With W-I-T-H?
Yep, the preposition W-I-T-H.
Withclutch.com. So when a credit union begins to test this system, how do they stick their toes in? What's the first step, either that is normal or that you would suggest?
Great question. In terms of, in other words, how do they try the software or how do they get comfortable that the software works? In general, when we go through implementation, we'll generally set up a bunch of demo sandboxes. And so those demo sandboxes allow you to fully see how you can read and respond to actually what's happening. And so in other words, we might read from your lending system and say, I want to read from your lending system. I want to see if I can interpret just from what's in there right now of what I need to communicate to the applicant. And then you can actually test. You can text back and forth, much like you'd use ChatGPT, to see, is this responding to what I want? Is it safe enough to what I see? How do I pretend to be an adversary and get the results that I want? We've obviously already run this huge automated eval system that says we want to make sure when we make any change, are we passing everything we need? So the evals in this new world of language models are equally as challenging as building the fundamental systems themselves. But if someone wants to interact, that's actually fairly straightforward to do once they start the evaluation process.
And then when they plug it in, are there walls around how far it goes?
Of course, there have to be walls. I mean, the biggest concerns with large language models and highly regulated industries are, I think there's comfort in employees. There's always a risk employee does something that's non-compliant, but it's generally self-contained to the employee. And there's sort of a chain of what happened, chain of responsibility. If they were informed, we knew they did the training, they were not supposed to do this. The world understands they're malicious humans, right? Or incompetent humans, one combination thereof. There's sort of less understanding of malicious AI. You're like, the world shouldn't have malicious AI. We have to engineer the system so it's not malicious.
We've seen the movies.
Or so it doesn't do
We've
these
seen the
things.
movies. We know what's coming.
Yeah, it's Space Odyssey 2001, first one. And so a lot of the guardrails are set up around how do we ensure that we're self-containing what we can and can't do, and how do we get very comfortable this containment meets an incredibly high burden. And so that's honestly where the majority of the system working comes in. That's the majority of the challenge in working with these systems. And the other challenge of LLMs, they're non-deterministic. So the same question 5 times is going to give you 5 different answers. So you're not going to get the consistency you would from a deterministic system. And so that means, once again, going back to the strength of your evals, you've got to be able to correctly evaluate, are you getting what you want out?
That sounds like a reason for going slow and careful. And that's why maybe there's 9 credit unions that are doing it so far. How long have they been in it? 12 months?
The longest has been about 18 months. So our earliest pilot partners are about 18 months. I actually think the slow is a misnomer, though. I wouldn't actually characterize it that way. I think it's just a question of understanding the risks. And so, as I said before, if you were to trust an LLM to be your lawyer, that's an area to go slow. Like lawyer, high consequences, right? High consequences, low certainty that the depth of knowledge is going to be 100% accurate. Things like greeting someone, or things like, using a fixed set of parameters to craft an amazing email, they're very low risk. And so there's no reason not to go quickly on some of these things. I think the key is understanding the risk you're taking, understanding the benefit that's associated with that risk, and then making an informed decision. And so I don't think it's different than many other, business choices that the credit union is going to fundamentally have to make. I think many financial institutions are geared towards understanding downside risks and not necessarily understanding upside benefits. And so part of our role is not only outlining what the risks are and the unforeseen risks, but also outlining what the benefits are. But it's not different than any other fundamental business problem. It's just a new context.
Yeah, it's that new part that's hard, and then the regulators regulate credit unions that way, right? All the
100%. 100%.
All on the downside.
But, I mean, to Chris's point, though, it doesn't have to be an all or nothing proposition, right? You can start off with, a fairly constrained, a very small room. You can box the AI into as small a footprint as you want, and test and learn into it, and then slowly, as you get a little bit more comfortable, expand it to various use cases.
What would that be? Because that's what I was trying to understand. Like, how don't get technical, but just generally, what's an example of that?
Well, I mean, we're seeing companies that are using AI just for back office employees, right? Just as an internal tool.
Yeah, right? I did one on that. Yes, yeah, that seems to work great.
And those, you can keep the walls very contained, just to
the risk low. The employee still knows.
Yeah. And you're still empowering the employee to communicate whatever they're looking for. But it's it's essentially a better search tool for them of what you've already laid out as your policies and procedures, your ways to interact, your answers to various FAQs.
Oh yeah.
It's a very simple thing to implement, and it drives incredible efficiency for those frontline employees that are interacting with members.
And the
member, so members walking into a branch and has a question, you don't want that teller to have to like run off to the back room and ask 3 different people. You want to be able to have them answer that right there, right then. Again, it's all about that member experience. Remove the friction, and it's a perfect way of doing it while still keeping that human front and center and in charge of what's being communicated.
There's another very low risk example is for training purposes. So often if you're trying to train someone with how to respond, you can actually create customers. So in some way, the AI pretends to be the customer, and the person in training now has to use the knowledge to know how to respond. So now in a typical role-playing exercise, you may have needed 3 people, you just need 2 now. And now you come with very consistent cases of what you're training against. And so those are examples like, if that goes off the walls and it does something malicious, no harm done. It's all in the building. It was for improving the employee. You can actually create the worst version of somebody that you want to train against too. And so in some ways, going off the rails isn't even bad in that case.
And I mean, that's actually possibly an area where AI hallucinations may work in your favor, right? Because people are unpredictable. People say all types of things. And so, that's a great way for the AI just to go crazy and see how those frontline employees react to those types of scenarios, right? It's all, and again, to Chris's broader point, you can't just think about the risk. Think about the efficiency of bringing someone on board and to hit that 100% rate of production instead of like 6 to 12 months in 1 to 3 months using that type of technology. Like there's incredible gains to be had by taking very little risk.
That's right.
Yeah. Yeah, the single source of knowledge always give the member the same answer across the distribution system. I give it to them quickly and let them then respond to the same answer, so that if there's an error, it's perhaps on the member side, which obviously is a problem as well. But just the consistency of answer and process is a very difficult challenge that AI should be great.
There's nothing that says you can't program your AI to say, I don't know, right? Like if you don't want it to venture into uncharted territory, just have those safeguards put into place. It's not that complicated.
When you think about or even look at actual cases where credit unions are implementing AI now and looking for the biggest growth in deposits or in lending, what are you seeing? What do you either see working now, like actual examples from Clutch or others, or where do you think it's going? Where do you think that impact is maybe being seen in fintech, and credit unions really need to grab it so that we can keep that member experience as strong as possible and grow as an industry?
I think it goes back to something Chris mentioned earlier. I mean, it's about presenting those types of opportunities to the member that are most relevant, and so it's really leaning into that hyper personalization, and that's where AI can really help credit unions make a quantum leap in their endeavors on that, assuming they have access to the right level of data. And that's been probably the biggest hurdle for most credit unions, because they have it in their core, their LOS, their CRM. They don't have that unified warehouse of information to drive that, but they're working on it. A lot of them are really investing the time and energy to get that single source of truth on their members so that they can drive those personalized offers to their members and have those direct conversations. What Clutch is doing,
that's a big
pulling that information right out of the LOS, which makes it kind of real time as the the member is interacting, especially at their point of need, with a very clear intent of what they're trying to achieve. They have a lot of information at their disposal to make that a reality.
I want to talk about that a little bit more. So you're saying credit unions are, because the data is in different places and is not connected, the potential AI solutions are not able to deliver because they can't get enough data on the member to anticipate their needs and deliver solutions or suggest solutions depending on what you're trying to do. I think that's what I heard you say. So if that's the case, what are the things in motion to close that gap? What do you know what credit unions are doing to address that gap? How are they aligning the data? Again, I don't, not too technical, just general high level, like when you identify that issue, how do you identify it? And then what do you do about it?
Yeah, I mean, we have companies in the portfolio like Architecture that are providing data warehousing solutions that are pulling all that data into a data warehouse and a data lake that will then become that single source of truth for the institution, so that if they have a marketing campaign, whatever they want to run with that data, now they have it accessible for utilizing AI. Because exactly to your point, you can have 1,000 different AI solutions, but if you don't have good data being plugged into it, they're kind of worthless. But whether they utilize a solution like that, if you have the wherewithal to do it yourself, you get an instance of Snowflake and do it. But it's pretty hard, right? It's especially given the fact that the credit union's data lives in so many different silos, particularly, and even just getting it out of the core itself is a gargantuan task that many fear and just don't have either the cooperation or the ability and the staff to really do it efficiently. And so they have to lend on partners like Architecture, like Clutch to help facilitate a lot of that.
Yeah, do you simplify that, Chris, or does Clutch in some way reduce the need to create the data warehouse and the UI for the warehouse and all that? That's a big project.
I mean, I think we've reduced it by doing the integration. So I think if you were a new upstart AI company right now, I think there's many areas where the majority of your work is going to be on the fundamentals of the AI itself, right? Like here's an example of a startup that I invested in, was one that basically answers phone calls for dealerships. It's part of the BDC. The majority of their time is figuring out how to do the best phone call, and then one simple system, which is create a lead or ship the lead. I think banking and credit unions and financial services generally have a higher threshold to even get started. And the reason being, a lot of your work is simply going to be the systems integrations. So a good example is integrating to core is a big endeavor, but it's really not all your data. Because if someone's applied for a loan, they're not in core yet. They're actually in the LOS. If someone's partially abandoned a deposit application, they're not in core yet. They're sitting somewhere else. And so a lot of our work is actually fundamentally trying to merge all these systems of what's partial, what's whole, how do we get this picture of a person and where they are in relationship to this credit union. And so we have to spend equal time on integrations as we do on building these fundamental systems. And so we do help a lot. Coincidentally, we have a slight leg up because we've already done these integrations for lots of other purposes. But I want to go back to one of the other questions you answered too, which is like, where are you seeing AI and what is actually helping? I actually go back to what are the fundamental needs of the service levels to members and applicants. And I think that's the horizon that's changed, where the expectations will continue to change and where AI needs to fill in the use cases. And so what I would say is that the expectations of the member are immediate, right? So anything that's preventing immediate from a process you have right now, fix it. Like it's going to be table stakes, giving loans immediately, getting deposits immediately, answering questions immediately. All of those are becoming table stakes. Secondarily, personalization and knowledge. And so if you were to think about this, the same problem could have been solved by humans before, but it wouldn't have been cost effective to do so. And so if you were to think about the world's greatest member experience, you might say, look, I want to assign a full-time employee to know absolutely everything about this person at all times, offer the most relevant product, know how this person wants to be communicated to, respond to them at any moment's notice, work 24/7. And you'd be like, that is a ridiculous service level to provide. That's actually what you want to do, though. That's what you want to do, and that's where you want to get to. And AI is an avenue to do that. I think those are the two areas where things that were not cost effective to do, or where you didn't have the systems knowledge, you're going to be able to fill in those gaps with the capabilities of AI. And that's all of that will be a massive, massive member windfall. So the experience as a member will only continue to get massively better.
And does a credit union have an edge there? Is there a reason to think that a credit union would be better positioned than a bank or a fintech to be able to operationalize that effort?
I think that's a big asterisk by that answer. Let me explain the asterisk by what that is. I think the credit unions have the best products for the average, not for every single person. They're not everything to everyone, but for the average American consumer, I think they're one of the best financial products. And so is a credit union well positioned from, do they have a technology team that can massively take advantage of this today? I would say the answer is no. Like if you're competing with a Chase Bank or a fintech on that regard, that's a hard competition. But that's actually where providers like ourselves or other vendors are going to fill in those gaps.
Yep.
You need to leverage the learnings of the industry, and you need to get industry level scale in order to address these problems. And so now let's presume that you can get equivalent solutions across the fintechs and across the Chases. Then I think in that environment, credit unions certainly win. Because now, if a consumer has a great experience everywhere, but the fundamental product or the financial services that a credit union offers are better than what a Chase or a fintech offers because they really can't compete, then I think credit unions win in that environment.
Is there like is there any sort of effort on in an industry level, a TruStage's level, or sort of innovative credit unions to try to solve for the clean data, the integrated data, the data that is needed to really drive the personalization? Like, is there any, maybe it's not a possibility, I don't know these things, but it's like, if it's done one credit union at a time, to some degree, that's going to have to be the case. But is there any effort that you've seen to make it anything where it's more plug and play, simplified by a QSO structure, perhaps, where the biggest credit unions with the most data have figured it out and might allow smaller credit unions to participate? Just anything like that going on?
I would say there's always a lot of talk around how to lean into that, particularly on the fraud side. And I think that is an area where credit unions could potentially come together and share that level of data, right? Because a fraudster who is attacking credit union down the road is certainly going to be attacking the credit union on the other side of town. And so, it's in everyone's best interest to shut down that fraudster. And how can we coordinate and share data around that? It's funny that you asked that, because it's something that when I talk to credit unions, when I sit on panels, I always have as a takeaway, like, this is what we should aspire to do. Like, this is what we need to do.
Yeah.
We are a community. We should lean into our community roots and collaborate on these types of efforts, because we're fighting a battle on so many different fronts. We'd be much stronger doing it collectively. I would say it's still aspirational, and I think there's interest in it. It's just getting that momentum to who's going to be the one to lead the charge and really start bringing all this together. And
well,
I'll say that there's probably some conversations still to be had on that.
Well, the conversation is being had right here, and that's part of why we're doing this, is to get that conversation legs and to try to find, I think the superpower of the credit union movement is our collective working together on things for the benefit of the member and being willing to share. And that's part of what I've been trying to capture today.
Yeah.
So any final thoughts for our listeners, Chris or Sam or Leah, with regard to AI or the efforts of TruStage or Clutch?
I mean, I'm just generally excited by the prospects. I think all the conversations I've been having with credit unions, everyone is leaning in. They want to better understand what is possible. Um, you know, and they're starting to think, taking that possibility to part of their own strategic plans and realizing that this is going to be a necessity. AI is going to be a foundational infrastructure that needs to be incorporated into the overall tech stack of credit unions for credit unions to be able to compete in the marketplace. And so it's great to see that there is this imperative setting in. Now, it's TruStage's job, it's Clutch's job to help credit unions and guide them along that path and help make it a little bit easier to get started.
Right on, Chris.
Cool. Yeah. I mean, what I would say is I think a lot of this is new, and by the nature of being new, it's scary. I think that's one view of like, how do I nervously dip my toe in the water? I have the other view, which is it's new and it's incredibly exciting for what it means for us as a company, for credit unions and their ability to deliver top tier services, and as I said before, just such a member windfall. Like if you think of how much you could benefit from effectively everyone having their own concierge or that level of service, I think that's the aspirational level we can get to, and I don't think we're that far off.
And we must get there, in my opinion. That must happen. And I want to be a part of that solution. And I'm so glad that you guys were able to take the time to join me today. Thank you for your service to the credit union movement. And listeners, please check out Clutch and TruStage Ventures. Until next time, thanks everyone.